Hi, I'm Brad.
I'm Meg, and welcome to the Millennial Report.
We missed y'all last week, but we're back at it again from the Nasdaq market site in Times Square and picking back up on the hashtag Life Goals mini-series that we started before.
Right, and we previously kicked off the series with Bill Chetney of GRP Advisor Alliance, who discussed retirement.
And today we shift the conversation a little bit towards financial wellness among millennials, featuring two very special guests. We've got Barbara Delaney, principal at Stonestreet Advisor Group, a member of GRP Advisor Alliance, and Liz Davidson, founder and CEO of Financial Finesse, the leading provider of workplace financial wellness programs. Great to have you both here today.
Yeah,
Thanks
you for
having
being
us
here. Oh my gosh, we need this, guys.
We do.
We really need this.
All the insights. Don't hold back.
All right.
We want it all for us and a few thousand of our closest friends as well.
Really though. So for a little background, starting off, could you tell us each a little bit about what you do and also your role?
Absolutely. So I'm founder and CEO of a company called Financial Finesse. And what we do is provide unbiased, unlimited personal financial guidance to employees all over the country as an employee benefit. No sales pitch. Our certified financial planners are there to provide guidance on any issue without selling any financial product or service. So it's a rare opportunity for employees to get access to this guidance without worrying about conflicts of interest.
Gotcha. I feel like that's something we've talked about before,
Yeah.
the benefits of having someone there who can help you with your financial planning as
Who
an
has
employee.
your back? Who's
Exactly.
your financial mentor? It's huge.
and
Yeah.
help you guide you through it.
Absolutely.
Exactly.
And we'll certainly dive into that a little bit
Yeah.
more as well today, because it's something that we need to touch on repeatedly to make sure everybody's getting the necessary information to walk away from this and make those right decisions.
Yep.
And Barbara, what about you?
So I'm Barbara Delaney with Stonestreet, a founder there, but we're a member firm of GRP Advisor Alliance. As the Alliance, we represent over 5,000 plan sponsors throughout the country, and we have access to 2,000 working Americans. Of those, 2 million
Oh, wow.
working Americans, I apologize. Of those 2 million, I would imagine it's half of them are millennials, so we do have a lot of feedback and information that we can help guide them through financial success. We've also partnered with Financial Finesse. Liz's success has typically been in the larger plan market, so we are working now to bring what she delivers as financial wellness to our plan sponsors and really developing programs for the millennial generation that we think that where they need the most help.
Absolutely. we do.
Totally.
So just to back this up and approach this from a 10,000-foot level and then dive in from there, we both know some of the struggles that we're personally going through as millennials, financially at least. But with your industry experience and the knowledge that you've amassed over the years at each of your organizations, what would you say are, say, the top 3 issues that millennials are facing financially right now?
You know, it's interesting because I think millennials are so stereotyped, right? And
I agree.
It's really there's a vast array of issues, but I would sum it up in 3 key issues that form what really financial wellness is, because I think that's what we all aspire to, is to be financially healthy. The first is coping with financial stress, and so getting to a place where you have a strong financial foundation, emergency savings, you're properly insured. If something happens to you, because we live in an uncertain world, you're going to be okay. And then secondarily, making sure you are on track to achieve hashtag life goals,
Yep.
but
Love
to
it.
achieve those life goals,
Yeah.
that you have a plan. And you're not going to get there right away, but that you have a plan and you're investing the right way. And that includes a plan for paying down debt, potentially purchasing a home, planning for having a family, all of those things.
So our job when we work with plan sponsors is to develop employee communications, and we try to segment that now to millennials. And your question was, what is the biggest stress factors that we hear? Now, I can give you firsthand. I have 2 millennials that I work with personally at home, my 2 children, and I've polled them, and I poll them all the time about what bothers them, because it's really important to get insight from their perspective. I would say the biggest thing we hear is student debt. How do I pay down student debt? How do I learn basics of budgeting? And more and more we're hearing, how do I pay for health care? What are the choices that I need to make, and how do I make them? So we are very much exploring helping the needs of the student debt by vetting out some companies now that will actually, as an employee benefit, help you consolidate that debt through your employer. And then employers are actually considering, if you meet certain measures, so success measures, they'll actually do a matching contribution for that. So, you know, listening to millennials, we're trying to come up with the answers that will help them. But those are the three things that we see as their biggest stress factors.
I agree with you. I know the second I graduated, the first thing my dad and I did was sit down and try to map out a budget plan. And it included how I'm going to pay off my student debt over the years. Now, will I say I stuck to that the whole way, and has that changed? Absolutely, because different things get thrown at you in life, and you have to adjust a little bit. So, but it's good to have a foundation to start off on, and it sounds like you're implementing that in the home already with your kids.
You know,
as
it's
well.
interesting. Millennials do get a bad rap. I mean, you are the smartest generation we've ever had. So, and you truly are. So, looking for someone to help them. We know there's digital. You do respond well to digital needs, but we also think a combination of hands-on, where we can give you programs that are offered through your workforce and understand them, but more importantly, giving you actionable items that can help you solve some of those issues. Budgeting, saving in your 401k plan. Do you do a Roth contribution or do you do a pre-tax contribution? And those are areas that I hear from the millennials I talk to where they really need the most guidance.
And in terms of getting a job right out of the gate, right? Obviously, you can do a lot of financial planning after you graduate from college, but a lot of people, struggle to get a job, first and foremost. And then, to be honest with you, when I was making selections over any job offers I had, I wasn't really evaluating the benefits like I was evaluating, salary. That was not, and it was because I didn't have experience with those benefits. I also, kept in mind that I'm young, and that things like the health insurance and the health benefits, things like that, might not be the biggest draw for me. In terms of finding a job and things like that, how do you think that millennials should be looking at that? Was I correct, or was I a little bit too confident because I have that problem? And I don't like, and I also, I struggle in asking questions. I don't always want to ask questions. I don't want to look like I'm not knowledgeable.
Well, I think it's, Barbara and I were talking about that this morning, which is, obviously in a generation, a lot has changed. The companies used to really take care of everything for you, and now we're in a do-it-yourself world. But there's still so many good benefits out there. And one of the biggest mistakes we see millennials make is not understanding when they get the job offer. They're looking at the comp, but they're not understanding, is there a match on the retirement plan? What are you doing to help me out with my health care, even if it's matching an HSA? What voluntary benefits do you have at discounted rates or that you may be subsidizing? Do you have student loan programs that you help subsidize our student loans or consolidate? There's so many benefits these days. And so it's making sure you really ask those questions and ideally work with a financial coach or a financial planner. And you can go to a fee-only financial planner and present the different job offers you get. Not that you're leaving or going anywhere.
No.
But for those of you out there in the audience listening right now, and say, what is the total value of these offers? Because it's much more than just the compensation.
I mean, if you look at some of the stats that you guys sent over, 71% of millennials say they would value a financial coach to help them understand the complexities of their retirement plan. I mean, things like that. And that's something we spoke about at length, right, with GRP in the past. But I just, the healthcare benefits. So one thing that we experienced just this week, I got a little poke from my benevolent employer saying that I needed to, just reassess my healthcare plan for the coming year. And I have, a couple weeks to get that done, but I stuck that little reminder in my bag. And now as I rummage through my bag, I keep getting hit by this little postcard they sent me. And I haven't done it yet. And because I always feel like I'm doing eeny, meeny, miny,
your generation
and trying to figure that out.
is the first one that we've seen where you're going to have to take much more of an active role in your health care. So we're seeing a really cross between financial wellness and wellness, because with your HSAs, that's a savings account that you can use. Most millennials don't understand it. Quite honestly, no one understands it. So we're really seeing a drive towards helping you understand not only your options within your 401k plan, but how do you make your healthcare choices? It's no longer like in my generation, we went to the doctor and they said to us, do this. You really have to become an active partner. So if they ask you to go for an MRI, it's really up to you to shop that MRI and decide which one's cheaper, because the savings can stay in your savings account. And ultimately, you can invest that. So we're seeing a real crossroads between financial wellness, what we're doing with financial finesse, and just running into the competing dollars, if you will. Where do you spend your dollars is paying down your debt, budgeting, your health care, and your savings for retirement.
I would also ask, what financial coaching do you have available? You probably have some sort of financial coaching benefit. In many cases, they're telephonic and they're unlimited. So if you can tap into that, it may be through an employee assistance program, but if you can tap into that and say, hey, here's my options, here's my situation, get some help and guidance. That's something we're seeing more and more in the workplace, and I think it's invaluable because there's so many decision-making points now.
That's some homework for me to do. 'Cause I don't know that we have that benefit right now.
Well, same here too, and I don't want to, throw shade
I'm
at
just
all.
saying, I don't know.
And I really don't
might.
know.
Yeah.
You might, through an employee assistance
thing we should
provider
know.
at the very least, they often have some form of financial counseling,
Okay.
so check into it.
And that's what GRP's role is. We traditionally have been retirement plan specialists, but we're really more life coaches now. We're seeing ourselves because, if you don't meet the needs of every generation in a different way, we're really not doing our job. So starting you off on the right track is huge, and then also on the end of it, helping people retire. But we're really focusing a lot on the millennial generation and getting them engaged and what way is effective, and really helps you learn. What is the best strategy to help you learn?
So staying there for a second, when we're thinking about planning for retirement and budgeting and all of the things that we're factoring into this conversation here, how do we set up a proper budget to be able to make sure that we're actually hitting those goals to eventually march towards retirement? Because we don't want to be here forever. As great as this is, you know what I mean? We don't want to be here forever.
Or you want the freedom,
Exactly.
right? The freedom to live life on your own terms.
Yeah, step one is sitting down and doing it. Just carving out an hour. And like you did, talk to your dad, talk to someone. You can there's so many tools available online to help you do budgeting and planning. But I honestly think maybe once a year, sit down with someone to help you. Are you on track? Is this the right amount I'm saving? Would it be better to pay down this credit card debt, or do I continue to save more in my 401k plan? And a lot of times the answer is reduce your credit card debt. I am amazed. My son just graduated a year and a half ago, and he applied for a credit card, and he's had no credit. He was offered $10,000 as his first line of credit. I'm like, do you never use that? He wanted to get it for his United.
Where do I get this?
Well, it is a United card, and he moved to California, so he's been traveling. And I was floored. And his girlfriend applied too, and she got $5,000. And I'm like, don't use that.
Right.
So making decisions like, what you need to do is use the technologies that's out there. But I honestly say, like, when people come to my home for Thanksgiving, we'll all gather soon. They sit next to me. That's their financial planning for the year. My daughter's friends. So it's really a combination of helping you help yourselves.
I'm trying to come to the next Delaney Thanksgiving. I'm just saying. Got a couple things I need to work out.
It's a common thing. All the friends come over, and they bring their 401k statements, and we sit down and look at it, Roth, not Roth.
That's invaluable right there. Yeah, and I mean the financial coaching. Now, in terms of savings, I feel like savings is one of the simplest things I could be doing. No strings attached, just having a savings account that I can have. It's like a nest egg or a fallback, just that emergency cash, right? Now, a lot of millennials, and we see here that nearly 2/3 of working millennials say they're never going to accumulate $1 million in savings over their lifetime. Now, I think that savings is the most proactive thing I can do right now, where I feel like I have a lot of control over that money, and I can proactively save money. But how much should we be saving right now? As millennials being young, because you don't want that cash to sit there. But like how much of my my compensation should I be committed to saving?
Well, I think obviously it's a very individual question.
Yeah.
And I think we all have to get away from this. It must be this amount because, as you mentioned, things change, life changes, priorities change. All that said, I'm a fan for automating it because if you set it and forget it, you can always change it. But if you set it and forget it, you're not proactively making that sacrifice each month. So it's looking at siphoning off a part of your paycheck to make sure you have a good emergency fund, and then how much can you put in your 401k automatically, and escalating that over time. So doing what you can now, and then you can you can sign up for an automatic escalation if your company has that available, where each year it goes up 1 or 2%. You probably aren't even going to notice that.
And most employers do offer that now.
Huge difference. So it's automating those two things, and your payroll department should be set up to allow you to say, you know what, put 5% of my paycheck in a checking account or some sort of safe, liquid account, and then put the rest in my 401k.
Yeah.
Not the rest.
Yeah.
You know what I mean?
put it all
And
in.
put it all in the
Get out of
401k
here.
and
Yeah.
sleep here at night. No, but put the maximum you are able to in your 401k.
And I think we did get a notification about that too,
Yeah,
where it was, this is where you're at right now, but you should up that target to, X percent, because you'll be able to see those benefits kick in a little bit sooner in the form of that account that's just going to have the money, pile of money just sitting over there one day.
And if you start younger, if you do start when you're out of the gate at 25 and you do accumulate, you theoretically will become millionaires just by power of compounding.
Yeah.
So starting small and escalating is a really important thing to do, and just getting used to it.
I think in summary so far, my takeaway is that I need to be asking more questions. I need to be diving deeper into the benefits package that I already have to see if perhaps there is that financial coaching, to see what I can automate. And there's that. I think that in a lot of cases, millennials might find that there's a lot more benefit to their benefits than we give them credit for. We like to
Absolutely.
brush them under the rug.
Yes.
So and that's something that I know I'm not doing, and I should be.
And I think it also comes down to a fluid partnership between employees and the employer as well. There needs to be training that's available, because we're coming out of college and we're like, all right, cool, I absolutely know what mitosis is, but I have no idea how to figure out, what I should be putting away for retirement.
Forgotten my toast.
Exactly.
Exactly what you need.
I can balance a chemical equation to the ends of the earth.
Calculus,
Yeah,
right?
there
They
you go.
teach you calculus, but they don't teach you,
No.
just basic
Exactly.
budgeting and how much do you set aside from emergencies and
Yeah.
how much insurance do you need just
Absolutely.
to make sure
And
if
so that
something
more
happens
employers
to you.
are definitely becoming engaged with this, because they're hearing from people like you and us that this is what's wanted, this is what's needed out there. They want the education, they want to know how to budget, and they don't want to be embarrassed to ask for it.
Yeah.
Right.
So develop ways that we can deliver service like that.
Certainly agree. Just before we wrap, I know there's a lot of types of investments that we can also get involved in to make sure that if we are putting something away into an investment, to make sure that we're seeing that return over time as well. What types of investments would you suggest make sense for millennials who are just starting to put some of those funds away?
Well, let me start kind of broad-based, and then this is Barbara's, lane. So very broad-based, and I wrote a book about this. First chapter, keep your money where you make your money. So when you think of investing, take advantage of what your employer provides, whether it's 401k or HSA. You can invest as well in an HSA. Take advantage of those benefits first, because they're often tax advantaged. They have group purchasing power, so they're cheaper. Your employer's a fiduciary, so they have to make good decisions on your behalf. So that would be my very kind of high-level tip, and then turning it over to Barbara in terms of the individual investments.
Yes, and my advice to most younger folks, and actually people as they get older, use of target date funds. Those are the set it and forget it. So as you're younger, they're a much more aggressive portfolio, mostly in stocks, and as you get older, they dribble down. I mean, unless you're going to sit here and say, I am going to play an active role understanding my asset allocation and promise me that you're going to go home at night every quarter, look at your funds and rebalance, then, and you're saying, no, I'm not
That's
doing
a
that.
lot of Thanksgiving dinners,
That's a
I
lot
think.
of
Thanksgiving every week.
a target date fund is really a good solution.
Yeah.
And as you learn, as you get older and you start to accumulate wealth, then you start to learn more about it, but target date for sure.
Target date fund. Sounds like we've got a lot of things to look into.
Got a lot of questions to ask.
We do, but good ones.
Yeah.
And we're gonna be able to retire because
Thank
of
you
it.
guys
You
so much.
welcome.
absolutely are.
Yeah.
Thank you for having us.
Thank you.
Thank you.
Thank you for being here, and thank you all for watching live on Facebook. Stay tuned for more coming from the Nasdaq market site throughout the rest of the day. You just watched #LifeGoals Part 2. Stay tuned for Part 3.